Good morning, everybody. Hey, welcome to Wednesday, December 8th. Sorry, I've been out of pocket for a little while, doing some tax continuing education yesterday, getting updated Monday and Tuesday on some of the tax law changes, and didn't get much on the looking forward numbers, but did get updated on the current stuff. And so we're getting ready to implement some of those things going forward. But I'm glad you joined us today. Got a couple of days left this week. Market's making a great rebound, seems to be so far. And Dave and I will talk about that and more coming up next. But before we do, let me just remind you folks that you need a core retirement design to help design the retirement you always dreamed of. Give us a call at 863-382-0037 to start that process of developing your core retirement design. And we're looking forward to our conversation with Dave up next.
Faith Hill there, 8:40 now, 20 before 9. We always go and check in and see what's going on with your retirement fund this morning here. Wall Street messes with it every single day, sometimes to the good, sometimes to the bad, and sometimes we have no idea whatsoever what it thinks it's doing. That's why we use a pro who was back from continuing education for a couple of days, Phillip Statler from Statler Financial Services. Phillip, good morning and welcome home.
Hey, good morning, Dave. Yeah, it is. I spent 2 days doing tax continuing education, learning more about how much more money the government wants to take from you. So that was a good couple of days spent there, but back in the office now.
I'm assuming you probably also learned how to keep the government from taking more away from you too, right?
Well, we did try to find a few ways, but it's getting harder and harder, you know.
I understood that. We'll get into that more in detail when we start talking about tax season coming up. But for the moment, the Omicron variant on the coronavirus, everybody was scared to death. We had 600-point swings in the Dow, and everybody was thinking we're all going to die. And then the more we hear about it, the more we keep thinking might just be the variant on the vaccine that makes it something we can live with. And it looks like Wall Street started thinking about that way too yesterday, because the Dow was up 492 points. The NASDAQ was up 462. That's a full 3% in one day. And the S&P gained 95. Boy, happy days are here again, looking at one day for a snapshot, right?
Well, it really is. And one of the headlines I saw last night was the NASDAQ had its best day since March of this year. So that's a pretty high mark to beat.
I have not seen a 3% swing in one day upward, especially in 8 of the indexes in a long time. So, yeah, that was just happy days are here again. And while it's not as spectacular this morning, I'm predominantly seeing green ink on my delayed quotes on the futures as well. So who knows? It might even continue. Add on the fact that, my Lord in heaven, miracles do happen. The House actually passed a debt limit extension, so we don't need to play chicken at the end of the week.
Well, that's a good thing, because that always affects some of the volatility in the market when we deal with that debt ceiling vote. So it's done. It's out of the way. And so hopefully that's not going to affect the markets going forward.
Yeah, we all know it's always going to happen. They're always going to extend the debt ceiling, because I don't care whether you're a Republican, Democrat, or a complete crazy, which is kind of on both ends of the spectrum. Nobody's going to let us default on our bonds, but we play chicken with it every doggone time. Stock market goes into conniption fits. Consumers panic. The reporters on TV have orgasmic fits of glee because they've got something new to talk about. And then it all happens. I've always found the whole drama kind of annoying.
Yeah, it is. And it's one of those things you wish they would just set it far enough in advance that we wouldn't have to deal with it for a couple of years.
You think that's going to happen anytime soon?
Or hey, get this idea, Dave. Let's just pay some of it off so it doesn't matter.
No, you can't. Couldn't do that. Other things going on of semi-good news is evidently the Europeans are also looking at the Omicron variant and saying, well, this could be good too, because even Europe is going up, and they've got some really rotten numbers going on with the Delta variation right now. We hear news about the center part of this country having a little bit of an uptick in terms of cases and tragedies arising from the Delta variant. Europe's got it in spades, but even their markets are turning up. Evidently, Omicron is turning into actually semi-good news, isn't it?
Well, I guess so. But one of the things that I did see a headline across was England talking about shutting back down again and increasing their ability to get out and about. And if that starts happening again, then I think that may put some pressure on the markets across the board.
Yeah, if the politicians overreact, we'll probably have that. Speaking of politicians overreacting, go back to the good news side of the fence. President Biden's nominee to be controller of the currency withdrew her nomination yesterday. She was not the most popular person to the Republican side and even the centrist side of the Democrats, because there were some indications that her politics were slightly to the left of Alexandria Ocasio-Cortez. And her politics were getting her in some deep doo-doo during confirmation hearings. She finally threw in the towel yesterday, so President Biden's going to have to find somebody else to nominate.
Obviously, somebody didn't do their homework on that one, did they? Yeah.
Might be a good way to put it. Data dump out this morning, very, very little. We've got a job openings report coming out at 10. Early this morning, we got word out of the Mortgage Bankers Association that mortgage applications were up by a full 2% last week. That number might have a positive impact on the market because they were off badly last week. So generally, that's a little reassurance that things are progressing as they should be. End of earnings season, kind of off the tail end of earnings season, we actually got some household names reporting, didn't we?
We really do, Dave, and they kind of go all over the board today. We've got some really huge downturns, even though the earnings may have been okay. Let's start out with the staple company, Campbell Soup. I mean, you can't get much more better than homegrown Campbell Soup out there. So they came out, they beat by 8 cents a share, came in at 89 cents. Revenue was slightly below what they had expected. But demand remains elevated, which I guess, we're kind of getting cold and flu season. So that kind of makes sense right now.
Chicken.
Yep. Chicken soup. And so they are, they were up. They have gotten flat right now. They're down about 2 cents right now a share. So it just goes to show good news doesn't always mean we're going to end up to the positive. So, a big winner we did have, though, is the RV market still continues to be moving into positive territory. They're high demand. Thor Industries reported better than expected earnings. They beat by over $1 a share, about $1.10 a share. Revenue above forecast as well. Still, like I said, seeing strong demand for the RV market. They're trading up today 4.1%.
Cool.
Yeah, it's good news there. Now this one, this is the first time I really have seen this stock trading. I didn't realize they were a publicly traded company. Weber, the grill manufacturer that makes those Weber grills, not so cheap Weber grills, I might add. So
they're the gold standard of the charcoal grill industry, and they make a pretty doggone good gas grill too. They are not the cheap line of grills, though, by any measure.
No, they come out, they lost money, but they were expected to lose like 13 cents a share, and they only lost 5. So that was better than expected. Revenue came in stronger than expected. So Weber is getting a nice little bump this morning, up almost 6% before the market opens up. Let me just say they're trading really down low. They actually closed yesterday almost pretty close to their 52-week low. So they're getting a little bounce this morning, which is nice.
Like I said, I know they're a premium product in a line of work and a product that kind of has gotten commoditized lately with all the discounted brand grills that you can find in every discount store out there. They probably do have some challenges.
I think so. So here's my big loser of the day, Dave. And they didn't lose in earnings though. Stitch Fix came out. They did they did okay when it comes to their actual numbers. I was trying to find those real quick because they weren't in my normal little sheet there. But they came in better than expected in both the earnings category and the revenue category. They still lost money. Don't get me wrong, they still lost money, but just not as much as expected. But here's where they got beat. They're getting killed on guidance.
Ooh.
And, Stitch Fix is a membership, you subscribe to it. So it's a membership type thing. And those two numbers came well far of what Wall Street expected it to be. And so they're trading down today 25.5%.
Youch, that's got to hurt. They've got a business model that's a little bit like Netflix, where the measure that they look at is the number of new subscribers, I'd assume.
Well, no, and continued subscribers, right? Because that one's the easy one to drop off, right? I'm tired. I got enough clothes. I don't need any more, that type of thing. So just to kind of update that too, that will put them at a new 52-week low at $18.60 some odd cents a share. Previous 52-week low was $22.04. So well below that number this morning. Right. I've got a couple more for you. Let's look at Toll Brothers in the real estate market, the construction people. They had better than expected earnings. They beat by over 50 cents a share. Revenue better than expected. They expect 20% growth in 2022. So that's some good news for Toll Brothers. They're up about 0.9% this morning. And then the last one I have for you is Dave & Buster's. Dave & Buster's, kind of the adult arcade store, bar and restaurant. They beat by 8 cents a share, came in at 23 cents. Revenue came in above expectations as well. They're trading up 5.6% this morning.
Dave & Buster's, because girls just want to have fun. Resetting the table, as mentioned yesterday, big up in all three of the major indexes. Looks like everybody's happy with the relief that people are feeling from the COVID scare, because my big gainers list includes basically all the big cruise lines. They're all up by more than 1.5% in pre-market trading this morning. Does that follow over to the indexes? How are we doing 45 minutes early?
It does, Dave. We've got everything really looking pretty good this morning, at least at the start. The Dow is up a little less than 0.2%, about $60. The S&P 500 is up in between 0.1 and 0.2%, about $7. NASDAQ, let's just call it even right now. Small cap, Russell 2000 is getting a nice little bump today, up almost 1% this morning. And then let's move to the commodity side of the fence. We've got silver down 0.4% to $22.43 an ounce. That's the lowest I think I can remember seeing it in a while. Gold is still down. It's basically flat at $1,785 an ounce. Crude oil is heading up today, Dave, up 0.25%, $72.24 a barrel.
And we could probably predict that as soon as the scare from the COVID thing ends, because the price of crude oil tanked as soon as they announced the Omicron variant.
That's right. So that was the fear of everything getting shut down again. That fear is getting relieved a little bit now. So those numbers will head back up.
So your gas prices are going up. Big surprise there, right? Asian Rim markets pretty happy with what we did yesterday. They were all up, and some of them considerably at the close. Europe, with after a big recovery yesterday, is a mixed bag this morning. As Phillip mentioned, that we've got a lot of talk about shutdowns and more panics. We got a mixed bag. French markets are off by about 0.17%. German by 0.5%. England, well, they're pretty happy. They're up by 0.25%. Phillip, people need to know what to do, and some deadlines actually count toward the end of the year as far as retirement plans. Time to get with a financial advisor to figure out how to make retirement work better. How do I find you?
Dave, now's a great time with all the volatility. I mean, yeah, we saw some good moves this week in the market, but we look back to last week and the week before, not so good moves. So volatility is a big deal. Our core retirement design is designed to help you create the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design meeting with us. And then check out our website, statlerfinancial.com. Join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and on 95.3 FM.
Something we're awful darn proud of. I appreciate you. Phillip, enjoy. I'll see you tomorrow. Fair enough?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope your week is going well. I look forward to speaking to you again tomorrow. Hey, share this with your friends and family. Love to get them connected with what we do here at Statler Financial. Until then, have a great day. Bye now.